Hey, welcome back, everyone. It is time for another red hot covered call video. Well, hey, look, today we're going to talk about how we can use options, covered call options on Apple once it splits so we can profit from it. Okay. So I get this question all the time with the new Apple announcement that they're going to split their stock 4-for-1. The reality is everybody wants to be in the big five, right? We have Facebook, we have Apple, we have Google, we have Microsoft, but their stock prices are so big now. Just to buy 100 shares of Google, you're going to drop about 150 G's. Now, in the case of Apple, the stock recently traded at $462. So to even buy 100 shares, you're going to have $46,200. Now, a lot of people, a lot of small ball players don't have that. And even if they did have that, their portfolios are going to be so out of whack based on diversification. We just don't want to go there. So this stock split announced by Apple, the real excitement comes when we sell premium against it. And that's where I'm going to show you some numbers. I think it's going to excite you because you're going to see how we can profit from it. Because right now we're not profiting from it because it's going to cost us $46,200 just to get 100 shares. And when you see the fat premiums that are currently trading, you're going to have serious money. You're going to have to take serious risk because the stock is so expensive. But once that split happens, things change. Now, I'm going to show you how they're going to change to the positive here. So let's go ahead and get to this. If you like what you're hearing today, I want you to subscribe to the channel. It's there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. So what we're doing is this. We're talking the Apple stock split. Now, everybody wants a piece of this. So the first thing that we need to know is what is a stock split. Now, I'm not going to go down the road of explaining that here. I mean, if you don't know what a stock split is, I want you to go to YouTube and search, what is a stock split? You're going to find that essentially what it is a company will split its stock to lower the purchase price of its shares. Now, they're not doing anything else. They're just splitting it. In the case of Apple, they're splitting it 4-for-1. So if you own 100 shares, when Apple splits 4-for-1, they're going to give you an additional 300 shares, right? Because you already own 100. They're splitting it 4-for-1. You're going to end up with 400 shares total, okay? So what happens when that happens? That the stock, which is now trading for $462, will have a new trading price of $115. So the cost of entry for the small ball player starts to become favorable, right? So now more retail investors like you and I can get into the stock. We now can trade it. And I actually believe that over the past 10 years, these big companies have allowed their stocks to grow to actually push out the retail investor. The point is, the smaller the stock price, the more volatile you can get because you have more people having enough money to trade them, right? Usually a stock split indicates that the company believes that things are so good they could split their stock. Remember, if a stock were to fall under $10, most markets will send them a delisting notification. So if you're a CEO of a company and you're making this decision, man, you have to believe the stock is going to trade higher. So back in the day, stock splits usually told Wall Street, hey, look, we feel comfortable. We are going higher. And of course, back in the dot-com boom and bust, that's exactly what happened. Many of these stocks would rally some 100 points just on the news that they were splitting their stock. With that said, well, let's do some basic math here. If we split this 4 ways, what do we have? We're going to have a stock that's now trading at 115, okay? So 115 is very reasonable to get in and play this for options. I'm going to show you some actual options price that I think you're going to like. Now, how can you play the stock split? Well, I'll tell you what, to sell premium, we need 100 shares, right? You might want to go out, if you're interested in doing the stock split, you might want to go out and buy yourself 25 shares of Apple. Because again, they're going to split it 4-for-1. That's going to give you your 100 shares so you can write some covered calls. Okay, you got to have 100 shares of Apple. So one strategy might be to right now, when it's trading at 462, go out and buy 25 shares, wait for the split to happen. You then get your 100 shares right? They'll give you those additional 75 shares. You'll have 100. You can sell your first Apple contract, okay? Another might be to buy 100 shares, and now you have 400 shares. You can now write 4 contracts. Now the premiums are going to pay some great short-term premiums, right? They're going to put that cash in your pocket. We're starting to talk real money. How does the Apple stock split benefit us? Well, the reality is if you had no shares, you're now able to get into the game and you're going to be able to play. Now, if you have 100 shares now, you're benefiting from selling call premium and you're collecting some serious premium. And I'm going to show you some premiums here. In fact, let's go over to the premium chart for Apple. Now, as of this recording, I'm just going to go 30 days out, right? The typical wheelhouse 30-day trade for a covered call. We own 100 shares. We're going to give someone the right, but not the obligation to take our shares away from us. In this case, I'm going to use the at the money strike. Now I've selected the September 18th expiration. Okay. So what we're going to do is give somebody the right, but not the obligation to take our shares away from us at the money. So basically around 460, 465. The idea is I own 100 shares and I'm going to write that covered call. Now, currently the premiums are sitting at a fat $19 a share. So if you have 100 shares and you write the September 18th covered call, what you're going to find is this: you're going to get paid $1,900 into your account today. And what we're doing is we're selling an at the money covered call. So they're going to have the ability to take the shares from us at 460. But the point is these fat premiums of $19 are pocketing some $1,900 into your account. Well, how does this play with a stock split? It's really simple. These premiums, for the most part, are going to be divided by 4. So where this $19 premium is today for an at the money, this same premium will be $4.80. So if you had 100 shares, you're going to be able to then write the covered call and you'll only collect $482. So all of it is just divided by 4. So don't sweat that. But here's where you can benefit, right? If you're using the poor man's covered call strategy, this allows you to get into the game. What I mean by that is this: when we use the poor man's covered call strategy, we're going to have to buy a leap for protection, right? If you don't know what the poor man's covered call is, go to YouTube, go to my channel, search poor man's covered call, watch it. Okay. They're using a leap option for protection. They're not covered, but then they're going to write the near term covered call to generate profits as if they own the shares. But here's the deal. When Apple splits, think of the cost of entry, $4.80. And you're able to then only put up $482 for leverage on 100 shares, right? Now, with that said, a leap on Apple is not going to cost $4.80, but you get my point. Whereas before you would have had to pony up $1,900 per 100 shares, you're only ponying up $480 for 100 shares if you were to buy that leap. Okay. Again, the leap prices are not $4.80 and $19.30, but with the stock split, so does all the option prices. So what you're going to find is the option players, whether they're buyers or sellers, they're happy. They're in happy land because Apple becomes in play for the poor man's covered call, buying and selling options, right? Because it is now $115 stock when they split. And I'll tell you what, if you had 100 shares, you now have 400 shares. You can now get creative where you could actually write a covered call on 200 shares and wait for the stock to move a little bit and write another covered call. Maybe the stock went higher, you get a higher return because the stock has gone higher when you write that second covered call. You know, it just opens up the door for the option buyers and sellers to get in the game on Apple where they may not have in the past. So in summary, Apple splitting 4 for 1. Okay, you want to go to the internet and you want to search to when that happens. I think Yahoo Finance will tell you what that is. You want to make sure if you're selling premium, you want to make sure you have 100 shares. Now, you could either wait for the stock to split, buy your 100 shares then, or you could buy 25 shares now, and when it splits, you could potentially have your 100 shares then, okay? You obviously have to make that decision how you want to do it. Now, Apple's trading for 462 now. It may not be trading for 462 then, but you do the math. When we can acquire 100 shares or more, we can now sell premium. We can then Go out, get in the game, sell premium against those shares, those highly valuable shares, man. Apple is at the top of the mountain when it comes to the stock market. Quite frankly, they are. They're the biggest company on the planet. Everybody loves Apple and they want to play Apple. See, they can't get into it now because it's too pricey. But once they split, you're going to see more talk on CNBC and all the TV analysts just talk about how Apple's options are moving. And it's because more and more people are getting involved. Look, that's how we're going to benefit from this Apple split. If you're a small ball player, think about it. It splits 4-for-1. It's $115 stock. All you need is $11,500 to get 100 shares and get in the game. And that's the key thing, man. Small ball players are going to be able to play one of the largest companies on the planet, whereas right now we can't. So I'm going to leave it there. And that's how options players are going to benefit. Hey, look, I'm going to leave it right there. I hope you enjoyed this quick video on Apple and how covered call writers can benefit. Go ahead and look up the poor man's covered call and make your decision. Do you want 25 shares now to get 100 later? Do you want 100 now to have 400 then? If you like what you heard today, I want you to subscribe to the channel. And if you like this video today, bang that like button. It lets me know you like what I'm doing. And over here on Facebook, if you go to Facebook and search CTP Dashboard, follow my page, you're probably going to find out if I end up buying into Apple, because that's where I love to post up all the time what John is doing in his trading. Hey, look, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.